Good afternoon, and welcome to the end of week market review for Friday, September 19th, 2014. You're going to see that things are going really well for the US markets, while the Canadian markets are now declining bearish. Taking a look at the market news, you're going to see that the markets did end the week up, although the day did end up slightly slower. The Dow Jones is up 0.08% on the day, while the S&P 500 is down 0.05% for the day. You are going to see quite a few declines from our commodities, with gold down 0.29%, silver down 3.94%, and oil down 0.67%. Taking a look at our economic reports, you're going to see that they were expecting 305,000 filings. In actuality, they had 280,000 filings. This means that they had much fewer than expected, and was definitely one of the key contributors to the markets rising. Looking at the S&P 500 on the daily chart, you're going to see that we are now at all-time highs, albeit with the day pulling back slightly. Right now it's looking for some support at the previous cycle high. The MACD is rising bullish, and with that black line over top of the blue line. Looking at the S&P 500 on the weekly chart, you're going to see that we've reconfirmed that the S&P 500 is at all-time highs, and at highs that we've never seen the S&P 500 at before. We're going to expect that the markets could pull back. They might even find some support at the 26 EMA before working themselves up again. Looking at the TSX, you're going to see that this is where we're really seeing some declines. We actually had a very large loss today, causing the support to be broken and now below all levels of support, with the exception of the 200 EMA, which is substantially lower. We definitely don't expect that the TSX will get that low. If it does, though, we'll definitely be pushing well below cycle lows. The MACD is declining bearish, and with the black line below the blue line. Looking at the TSX on the weekly chart, you're going to see that if we do come down to support, that will be at the 26 EMA. If the 26 EMA doesn't do its job, it'll be the 40, which would be more comparable to that 200 EMA that we saw on the daily chart. The volatility indicator is currently at 12.18, which means that it is below all of its overhead resistance levels, which is a good thing. This is the indicator that we would like to see at a nice low level. So right now, we're very happy with what we see. It could definitely get lower, but even if it stays here, we'll be very happy with the trading results. It's going to mean that our trading positions are much more consistent, and we won't be seeing larger losses or larger gains. Really, it's all about nice, slow, steady gains. If you have any questions about anything that we've discussed, you can either send us an email or phone call. All of our contact information is on the screen. So with that said, this has been the end of week market review for Friday, September 19th, 2014. Ciao for now.